Hey, what's going on, guys? It's Travis with JT Wealth. I don't know if you've noticed, but the cost of just about everything has skyrocketed, and that's of course due to insane inflation, which is simultaneously lowering the value of your dollar. And just recently, the Fed has remarked that they are going to be increasing rates, or doing what's called a federal rate hike. What does a federal rate hike historically mean for the stock market, and what do we think is going to happen to the market here in 2022 when that does kick off? And between inflation and the federal rate hike, we're going to talk about 3 income creating stocks that are value based that you can put your money into today to really help grow your portfolio through 2022 and into the future. So let's get into it. Alright guys, thanks for checking out today's video. Hopefully you find some value in it. If you do, don't forget, smash the like button for me. Consider subscribing to the channel if you haven't already. And like I mentioned in the intro, we're going to talk about inflation, we're going to talk about the Fed's rate hike, and then we're going to talk about 3 income producing stocks that have up to 8.7% dividend yield. Now that's not the average, but that is just one of the 3. And this is how you're going to help set yourself up for success in the long term, even through periods of large inflation. I think we can all agree inflation is a bad thing. It is devaluing your dollar, and if you've gone to purchase a new or used vehicle in the last year, you definitely paid too much. But with a Fed rate hike coming up soon, possibly as soon as March, is that another negative to the stock market, or is that possibly a good thing? Let's take a look at what that historically meant for the stock market. Well, here's an article out of Market Watch, and it takes a very positive outlook. It says, "Get ready for the climb. Here's what history says about stock market returns during federal rate hike cycles." Now, the Fed and Powell have all but guaranteed that federal rate hikes will be coming. We don't know exactly how many, but it's guessed to be between 3 and hoped to be up to maybe 7. And again, that question that everybody's wondering is how many interest rate increases will the Federal Open Market Committee, with FOMC, dole out in 2022? JP Morgan Chase's company's CEO, Jamie Dimon, has intimated that 7 might be the number to beat, with market-based projections pointing to the potential for 3 increases to the federal funds rate in the coming months. And as it turns out, federal rate hike cycles, which we could enter as soon as March, turn out to be a positive thing for the stock market. Now, the last federal rate hike was in 2018, right before that rate hike cycle ended in 2019. Now let's take a look at this chart showing the most recent rate hike cycles going back to 1994 and all the way up to the most recent one that ended in 2019. And as you can tell, 4 out of the 5 resulted in positive for the Dow Jones, S&P, and the NASDAQ composite. Of course, that massive time span from 2008 to 2019 created just absolutely insane numbers. 213% for the Dow Jones, 243% for the S&P, and obviously the tech bubble there, that 442% from the NASDAQ. It was an absolutely insane time frame to be involved in tech. And with an average of 102.7 for the NASDAQ, 62.9 for the S&P 500, and 54.9 for the Dow Jones, it definitely looks like rate hikes do exceedingly well for the stock market all across the board. But a federal rate hike might not be enough to see those double-digit returns with inflation levels that we haven't seen since the 70s. So far this January, the Dow Jones, NASDAQ, and the S&P are all down so far for the new year, and we don't know exactly what's going to take place going forward or whether or not the Fed rate hike is going to be enough to kickstart those gains by March or whenever it really begins. That being said, what is working right now and what will continue to do well through periods of inflation and hopefully do even better when the Fed rate hike pushes the market to new levels? Well, right now, just for 2022, the S&P's energy sector is up 16.4%, followed in a not so close second by bank stocks at about 4.4%, again, just for 2022 alone. The other 9 sectors of the S&P are currently down for January in the new year. And all of that takes us to the 3 stocks that I want to share with you guys today that are going to help you with your inflationary your attempts to beat inflation, right? And that work off of the energy and the banks, as well as one extra sector that I threw in there. So let's get jumping right into those three stocks so you can have this information and get on with your day. And these stocks came out of a MoneyWise article that was titled 3 Attractive Income Stocks Yielding as High as 8.7%. With inflation at 40-year highs, this trio can help strengthen your dwindling purchasing power. And remember, if a company can provide increasing dividends over time, as well as increasing in value, that is an amazing way to hedge against inflation. And the S&P 500 on a whole has an average dividend of about 1.3% at the moment. And all of the three stocks I'm going to show you guys today are in excess of that, and some, or one specifically, is as much as 8.7%. And we're going to start things off with a bank stock. Why? Because bank stocks usually do not fear rising interest rates. They look forward to them. When central banks hike interest rates to tame inflation, banks get to lend money at higher rates than they borrow it from, pocketing the difference. And when interest rates rise, the spread for how much a bank earns widens. So as a result, the first stock we're looking at today is Bank of America, who's upped their payouts to shareholders recently. Back in July, Bank of America boosted its quarterly dividends 17% to 21 cents per share, and that gave the company an annual yield of 1.7% at the current share price. And according to the latest earnings report, the bank earned a profit of $7.7 billion in the third quarter, which was up 58% from a year ago. Even with a recent slide, Bank of America shares have climbed 45% over the past year, and its peers like Goldman Sachs, JP Morgan Chase, and Morgan Stanley, all of which raised their dividends in 2021, have also enjoyed substantial rallies during this period. So we talked about banks, now let's talk about energy with the number 2 stock on our list. And that is Southern Company, a gas and electric utility holding company headquartered out of Atlanta that serves close to 9 million customers. And the utility sector is known for being a defensive play, and not just against inflation. Come what may, people still need to heat their homes in the winter and turn the lights on at night. This is a recession-proof stock, and the business means that Southern can pay reliable dividends. Again, in April, this company boosted its quarterly payout by 2 cents per share to 66 cents per share, marking the 20th consecutive year that Southern has increased its dividend. If you look further back, you'll see the company has paid steady or increasing dividends since 1948. In the first 9 months of 2021, Southern earned an adjusted profit of $3.05 per share, which is up 9.7% year over year. And management expects full year adjusted earnings per share to be above the top end of their previous guidance range from $3.25 to $3.35. And trading at $68 a piece, Southern stock offers a solid annual yield of 3.9%. Now, to get those 8.7% yields we mentioned earlier, you gotta look at some lesser known stocks, and that's what we're doing for stock number 3 on today's list. And that stock is Global Partners. They're structured as a master limited partnership and is one of the largest independent owners, suppliers, and operators of gas stations and convenience stores in the Northeast. At the same time, it is a leading wholesale distributor of fuel products and is involved in transporting petroleum products and renewable fuels by rail from the mid-continental US and Canada. This business pays quarterly distributions of 57.5 cents per unit, which comes out to a staggering annual yield of 8.7%. In the trailing 12 months as of September 30th, Global Partners' distributable cash flow covered its payouts 1.1 times after factoring in distributions to its preferred unit holders. Alright guys, so those are the 3 stocks we're looking at today that can help you defeat or at least defend against inflation and everything that's been going on that is defeating the value of your dollar. Now, the federal rate hike might increase the stock market. Historically, it does have the ability to do that, but for the time being, here are options for you to increase the value of your dividend portfolio, your stock portfolio, your income portfolio, whatever the case may be, while inflation is still chipping away at everything else. Now, obviously, these are just provided for information and entertainment purposes only. I'm not recommending you buy any of the equities we discussed today. You always have to do your own due diligence before investing your hard-earned money. But like always, guys, thanks for checking out today's video. I really appreciate it. Until next time, bottoms up.